Today is Friday, January 26th, 2024. I blew up two challenges today, and I found myself, the reason I failed those two challenges is because I took those challenges and essentially just traded without thinking whatsoever, and I sized up to the max. And what happened was afterwards, those exceeded the daily max loss, and so those two accounts have been blown up. Fortunately for me, that the cost of these trading accounts are low. And I am, of course, there's a better way of trading free, essentially using demos that are free. But there's some spice that's added to this when I trade these challenges with a little bit of risk. And that gets my blood pumping and gets me motivated to jump in. And so some emotional factor has an attachment to this day trading. So that's why I do that. So I reloaded with a couple more accounts, a $28 account, because I get a 10% off whenever I fail one. They send me a code to get a 10% off. So I bought two today, and fortunately for me, the cost of doing business has substantially decreased. So I don't trade TD Ameritrade, so money does not leak out through there. However, the money does leak out through trading in the challenges. So I found myself at a point where I have identified three different setups that I could use. The third one is a bit foggy, but I hope to look into this further. So what I hope to do is get my dishes done at Westside Drive-In. Today I start work at 5 o'clock, which means that I have to, currently it's 2:50, so that's about an hour and a half. So I got about an hour and a half before I have to go start washing dishes. And then it will be Friday will be done in about 4.5 hours. So then I will come back here and start to figure out how I fit the things that I've seen so far, which I can categorize as the trades that I can make. One of them is when I keep watching a single pair, which I did a Google search on what is the most popular forex pair. It turns out it's Euro USD is the most popular. The strength of combined resources of several countries in Europe, and then labeling as Euro, and the strength of US dollar has a strong impact on the number of individuals who are trading it. So that's what I traded. And what I've noticed are at least three things. And there is one or two aside from that as well. Normally what happens is, if I were to cover the looser interpretation of one of the setups, is that there's a thing called dip and rip. And dip and rip is common throughout life itself. People fall down and people get up. That's called dip and rip. Right? People fall down and people get up. And so that's a prime example of that. And so what happens normally is that throughout the day, even if a stock is trending from beginning to the end, there will be certain sections that will have a little bit of pullback, and that's called a dip and rip at that point. But in a certain day, what will happen is that the trade will dip and then it'll recover partially throughout the day, and that's called a dip and rip. Or sometimes what it will do is it'll dip and then it will recover more so than the opening level. That's called a dip and rip. Or the check mark, like the Nike check mark. So now that's one thing that I keep an eye on, and the way that I keep that an eye on is when I look at a chart, I look to see, especially on the QQQs or technology stocks, NASDAQ 100, and maybe the Dow as well. But I look at the NASDAQ, the QQQ, and when I see that, there's also a dip and rip that occurs on that index. And so what I look for is essentially a higher high from the left to the right if I'm looking at the screen, which means that if there was a high that was set up on the left side and then it dips, then after it dips for a while, then a level is established. If that level somehow climbs above the previous high, squeezed in between is the low of the day, then there is a high chance that the rip has ensued. And so that's called a dip and rip that I normally keep an eye on. Now the along with that, what I've noticed about the Forex pair is that there is essentially a downward trend, and then after the downward trend, there is a level that comes back on the other side, which is the back end. And the way that I trade it is by anticipating where that level is, and I put a sell stop or buy stop in a MetaTrader 5 language. Essentially is placing where the puck is going to be in ice hockey language. And so what I do is one of the trades that I normally make is essentially place strategically at a certain level where I anticipate that it's going to reach. When it reaches that level, then I have then what I believe based on the data is that it's going to get to that level and then it'll surpass that level. And that's the reason why I'm setting that level based on what I see from the previous data. That's my number one setup. That's setup number one. Then a few days ago, I discovered a second setup, which is essentially called MAT, which is momentum, aggression, trend. Okay, momentum, aggression, trend, which means that in between these levels of range bound areas, like a couple of boxes, then there will be a tendency for the stock to move in a very aggressive manner that defines the momentum of the trend. So what I do is people buy higher highs and sell lower lows. The flip side is reversion trading. And I heard a statement that was made by professional day traders is that what do you get when you pick the bottom? You get smelly fingers, right? So that means reversion is very difficult to do because reversion is essentially saying I'm going to get in while it's going down. That's the totally opposite way of thinking. And what happens is there's another statement that's made. It's called don't catch a falling knife. Essentially, that's what reversion trading is attempting to do every time. And so I got burnt, singed numerous times. And so now the trading has evolved significantly, where now the psychology in my trading is impacting, becoming the primary instrument that is impacting on a negative way the way that I trade. And so just like today, I blew 2 accounts where I didn't even have to blow the account. The second part is what I've noticed, that I make mistakes. And when I make a trade by anticipating that a certain level will be achieved, is that the forex pair will reach it, go down, and then it'll revert and then go the other direction. If I do not turn that off, what it will do is, just like today with one of my accounts, it'll just keep going up until I look at it and go, oh my God, look at that. Look at the loss that I have. I'm thinking, hey, I should not have any losses right now because I disabled this thing. But unfortunately, I left a couple that was trade that was enabled, where automatically the candlestick formation entered into it and it reverted and went the other direction. Fortunately, before the account was blown, I was able to catch that and then close it out. But by skin of the teeth. So it's going to be a very, very tough road to get that account back up, because it has a severe drawdown. Now, so that's two. Those are the 2 setups that I'm using. Okay, those are the 2 setups, and one of them is essentially doing the higher high. The second part is looking at the momentum trade. Okay, that's the momentum trade. And the third one that I normally trade is essentially those are the 2 things that I trade. The third one essentially will be then the dip and rip trade that I anticipate, which essentially will happen once or twice a day. Okay, the idea is to capture that at least once a day, looking at it from a perspective of catching it just once. And if it happens again, it's possible to trade that again over and over. But there's essentially 3 different setups that I have, and those are the 3 different setups that I will be monitoring and using. So currently, I do not have a solution for range-bound situations, and that essentially just chops up my account. As soon as I get in, it does something, it flips over, and then, because my intention is to be a trend trader, not a reversion trader. And so when it's in a range, identified as a range, perhaps that's something that I could do in the future. So when it's in a range-bound situation, I should be looking towards reversion trading plus a stop loss that allows me to enter a trade based on thinking and drawing a box that defines where the range is located. And I could try that. And that could be the 4th setup that I can use. Only on specific range-bound situations. And when it's a wide trend, that could also apply as well. That's something that I need to document and look into as well. So there's actually 4 different trades that I can look at. There's 4 different trades, but essentially all of them are based on trend. The commonality between all 4 of these is trend, identifying the trend. The difference is the length of that trend. Okay, the length of trend. The wide trending has internally, there's a range. It's a range-bound situation, and so the So the part about a dip and rip may not be considered a range bound situation because it's breaking out of that trend. Anyway, so Forex opens up on Sunday at around 5 p.m. I think here at around 5 p.m. And then in the morning in Mountain Standard Time at 5:30, the forex market becomes volatile, and then at about 6:30, it becomes even more volatile as it synchronizes itself with the Wall Street. So I need to, and when I'm in that trade, I could be essentially the account because it's so volatile. The way that the red candles and the green candles just move so fast, it is dangerous to be in a trade when those times at those times. And so I need to document that situation. So I need to be aware of it. I have to avoid it. I have to make sure that I have a stop loss and ensure that I'm practicing the use of the stop loss. So the first of this year has brought a sort of a definite change in my trading career as a professional day trader. It has brought a different dimension into my trading, and I find myself utilizing the stop loss. I find myself realizing what risk is by blowing up so many. I must have bought. Fortunately, it's cheap. It's cheaper than previously before, because when I bought one of the ones, I could buy 6 of them here, right? So the month of January has allowed me to burn through a lot of challenge accounts, and I'm using it on buffet money. I could get 2 buffets for 1 challenge, and I've gained so much weight. I don't need to be eating too many buffets these days. Okay, just Costco pizza will be due. And that should help me throughout the evening. And I work less hours during the evening anyway, and so that's how things are. Okay, so there are 4 different setups that I am now going to. What I've noticed that I have not done at this point is essentially there's like. There may be 4, but it is the primary objective is to identify the trend within those 4 setups, right? Because essentially that's how money is made, based on trend. It has to move. It has to move. If it stays sideways, then there's no business. Okay? If it's just flatline, the market is dead, right? So that means that those 4 things, each one of those things, I was just listening to Al Brooks, and when he was first starting to trade, each of the setups were ideal, perfectly drawn, perfectly idealized version of the concept of such as a double bottom. And so there was no interpretation of slight skew on one point versus the other point to define how a double bottom is described. And so in the market throughout the year, what will happen is that the width, the height, certain levels, certain candle size will be different. And so what I have to do is characterize these specific flavors, the differences in each of my setups to a degree where I can cover And when I can look at it and say, hey, that looks like that. Oh, that looks like that even more. That looks like, that does not look like that. And I can look at this and I can say, oh, it's flipped around. It's the same, but it's flipped around. Okay, that's rotated. It's the same thing, but it's rotated. Okay, and then the other is, oh, it's that one, but it's slightly tilted a little bit. Oh, it's that one, but it's too wide. It's wide. It's that one, but the candle on one side is like misshapen, but it's actually hiding the actual premise, the actual thing that is the setups that I have in mind. And so what I have to do is, in order for me to identify more so that I can say, oh, it's that one, but it's slightly characterized slightly different, but the trade that I make will be primarily the same, but the impact, the levels at which I set my take profit and stop loss will be slightly different, because it is slightly different. It's a breed. It's a breed of cats. Okay, it's a breed of cats. So if I were to define cats and dogs, okay, the cat is going to be one setup, but there are plethora of different breeds of cats. Okay, and so some of them are Bengal cats. They have their coat is, but they have the fundamental structure of a cat. They may be a different size. Some cats are bigger. Some cats are smaller. Some cats are black. Some cats are like orange. Some cats are like, yeah, just like that. My kids have a cat, and it's got couple different shades of fur on it. So that means that in order for me to say, oh, that's a cat, but it's this type of a cat. Whereas if it's a dog, then I say, oh, it's so these are two different setups. And so now what I need to do is to, apparently Al Brooks he's working on a like encyclopedia of patterns or something. And he verbally disclosed that there's like thousands of them, thousands of patterns. And these are all based on different flavors of particular thing that occurs, which is essentially establishing the primary thing, which is the trend, defining the trend. So this weekend, after washing dishes and trying to get out of that restaurant as fast as possible, but doing all the work so that I can come over here and keep studying and get things going. So get things going at this point now is to categorize, to clearly identify what that situation is. For instance, the stock was doing this, it blipped up and then it blips down. Okay, so what I need to do is when I look at that situation, how do I know that it's going to go there and then start dropping, or instead of dropping and then it's going to go that way? So how do I know that? How do I trade that? I have to figure that out. I have to draw it out and say, okay, so that's called the momentum trade that I'm going to make. Okay, I'm going to make that momentum trade. That's what I'm going to do. So when I make that momentum trade, what do I need to observe in order for me to trade it properly? What do I need to do? Okay, so what things do I need to see in order to say that is a perfect A+ setup? Okay. See, that's how I define whether a setup is a A+ setup, or B+ setup, or C+ setup, or D- setup, or no trade at all. That's how I do it. I look at a particular candlestick formation, I identify it, then I rate it based on the confluences that are out there. And if the confluences are strong, A plus strong, then I label it as A plus. If for some reason, outside the control of what is normally going on, certain things happen, I have a stop loss to ensure that the trade that I make is going to be an A plus setup. Otherwise, there'll be a small chance that it could be incorrect. And so that's what I need to do right now, and however long it takes, because I am a professional day trader, and this is the life that I've chosen, that God has given to me. And fortunately for me, my car is running well, thank God. Fortunately, my computer is still running. I need to replace that as soon as possible because it takes like 15 to 30 minutes to boot up. And my cell phone is becoming outdated soon, very, very soon. And so that's what I need to do. I need to be able to now categorize the difference between. So what I need to do is, for a single setup, I need to clearly substantiate what makes an A plus, what makes a B plus, what makes a C plus, and what makes a no trade at all. So I need to look at, I need to define, for instance, the momentum trade and say, this is what it is. And that this supports this idea, and that's why it makes an A plus setup. If one or two things are missing, then I have to say, well, I don't see that. Why is it that I don't see that? I should be able to see a particular characteristics of that trade forming in order for me to say, that's what that is. But for some reason, if one or two confluences are missing from that particular setup, then I have to say, okay, it could be B plus or C plus setup, or no trade at all. So these are things that I need to carefully analyze and what the situation is. So, for instance, when it's a momentum trade, what is the gap between the point where A and B is? What is the gap? Okay? Point A and B is identified based on the left side. Okay? I can draw a level that has support and resistance on there. Or if it's in a channel, then I can define the upper and lower levels to define where those are. So based on that criteria, and when I look at the point where that level is, then I can deduce at which point, or I have to wait until further development occurs, okay? And I can categorize it, and I can say, okay, this has room to move. Let's say the support and resistance is wide based on the previous left data because it just spiked up once. Now it's retracing it, which means that when the levels are wide, it has a tremendous amount of capability to move from one point to the other point without obstruction. That would be an A plus setup. Okay, A plus setup. That would be it. The wide separation between the previous support and resistance. That would be an A plus setup. And the way that it moves very, very fast. If it moves very, very fast, that would be also support the fact that it is an A plus setup. Okay. Also, if the angle of movement is acute, meaning almost vertical, that means that's also an A plus setup. And if somehow there is a couple of different candles that paints it without interruption with a red candle, if the pair is moving up, the separation between the two candles are another green candle, that's also specifying that it is an A plus setup. So these are the things that I need to, I am a professional day trader now. Okay. I am a professional day trader now. I am. It is a simple matter of fact for me to now become profitable because I've already met the criterias of being a day trader. Now I need to meet the criteria of being a consistently profitable professional day trader. I am a professional day trader. I do this every day, every night, skipping sleep, sitting at that chair. And now I've bought some vitamins, apparently vitamin B12. Taking vitamin B12 will allow the mitochondria that's in me to generate more energy so that I can minimize dosing. So that's what I have looked forward to, and I have a few things that I would like to do once I become consistently profitable, and I hope to get there as soon as possible.